Mhm. Hello, everybody. This is Jim, the option professor. I thought I might be introduced, but I'll introduce myself. Quick background on myself. I've been doing the investment business for decades and decades, so I'm very familiar with all the different investments out there, including options. I have a company, the Option Professor, and I'll tell you about what we do there at the end of the broadcast. But I've traded thousands and thousands of these options over the years, and millions of dollars in stocks. And I was trained at the Options Institute at Chicago, at the Chicago Board of Options Exchange on advanced option training. So I'm very, very familiar with options, and I'll share my opinions and my knowledge with you today. But also, having a certain amount of net worth, I have investments in everything from the real estate to the stocks to the options and commodities and everything else. So I'm pretty familiar with how all this stuff works. So if you have questions, I'll be more than happy to try to help you with my opinion. Again, as I always say, I'm going to be sharing opinions and insights, but I'm not giving out advice. You go to your broker, and then you and the broker will find out what you're suitable to do, what's your risk tolerance, and all that kind of stuff. So I'll be sharing my opinions and observations today. At the end of the broadcast, like I said, I'll show you how I can help you. But right now, let's see what you got on your mind. We're supposed to be doing analyze your trade right now. So if you have stocks you want me to take a look at, please let me know in the chat box, and I will look them up. I know it's late in the day, so maybe some of you have had most of your stocks already done, but I see UNH is there, so I'll get into that right away. And then if I run out of people asking questions, I will show you what I think is a high potential if the money is going to rotate and go into other things besides NVIDIA, Supermicro and Lilly. So I'll show you what I'm looking at, which hopefully will be helpful to you. So far, I got UNH and I got FMCC. And let's see if there's anything else out there. Okay. Chat box. Okay, good. So they got a couple of them here, and then I'll get into some stuff that I'm looking at as well. And I'll get into the general market, which turned down today. Okay, so let's turn into UNH. Obviously, the Cadillac of hospital situations, healthcare, one of the real leaders. And I'll tell you what I do. I am interested in only two things after all these decades. I'm interested in what the trend of prices is doing, and I'm interested in the momentum. And everything else I'm aware of, I listen to, but I don't hang my hat on that. All the other stuff is called just additional ancillary information. The main thing I want to know is what's the trend of these prices, and I want to know what the momentum is, because after a certain point in momentum, you have an acceleration phase, either up or down. And I want to be in there on my calls or my longs with that acceleration phase. And I definitely want to be on the put side or the sell side when it goes into the deceleration stage. And I quantify that by the momentum. So that gives you a little background on what I'm going to be showing you here. All right. Now, whenever I look at anything, I look at it on a long-term basis, a intermediate, shorter-term basis, then a monthly basis. Why is that? Because if I go to the 20-year graph, I'd like to know that we're very close to the all-time high. And I'd like to know that the thing has gone from $200 to $550 in the last few years. So this is obviously a higher price. And I want to be careful about buying near a high price, right? I wouldn't know that if I just looked at the short-term graph. So that's why I look at the long-term graph to get perspective. Okay, now what do I see here? I got a couple of high points here, right? So the first thing I'm going to say is, what was the RSI in this neighborhood? I got to put it up there first. Hold on a second here. And the numbers for me speak for themselves. So I'm not a kind of guy who holds a lot of opinions on things that I won't dislodge. I follow the prices. So here we go. You got 71, and then you got 69, and then you got 68. So, let's call it somewhere around 73 has been around the high over here. And let's see what we're at here. So over here, we're at 63. And so that's called a divergence, and that's not good. What's that telling me is it's running out of steam. So I want no part of it at 550. Neither does anybody else, because we're already down to 492. So that would have told me that the thing's going to roll over. It is also come underneath these averages here, which are important. And what averages are they? You got to get above the blue line if you want to get back on board. So that's above... that is above staying above 486. So it went under 486. You see today's low or this month's low, 468. So that was obviously a bad thing, but it got back above it, which is a very good thing. Right now, you want no part of 486 if you're long the stock. And you certainly would like to get it above 509 and 504. If it does that, then the thing can get back on the bicycle. So those are the points right there. You want it to stay above 486. You want it to get above 504 and 509. And then you could even possibly take out the highs if the news changes properly. Okay, so that's how I see it right now. Let's see how it looks on more of the intermediate term stuff. On the yeah, see, it's rolled over here. It's underneath the purple line. That's not good. And right now you've got a big point, and you'll see a lot of these points are coincident. Remember I said 505, 509. Well, these ones that are very important come in at 504. That's where your red and the purple are meeting. So again, right in the same neighborhood. So you'll see it's coincident, not coincident. It rhymes, right? Okay, so that just tells you the numbers we were talking about are good. Now here, this thing is turned up, and it turned up right around 486. So you want this thing to stay above 490. What did I say? 486, same neighborhood, right? And you need it to get above these numbers here, particularly the gold number. And the gold number comes in at 505. So that's what I'm trying to tell you. If you have any hope that this thing is going to pay off, you got to get above 504, 505, and 509. And then, of course, it has got the purple it's going to run into, so there'll be problems up there. There is a gap there, so maybe it's going to make it shut a thing to close that gap, run into purple, have more trouble up there, and go back into the soup. You know, that would be something that could happen. The RSI is trying to break through 50, so it is trying to get going. So again, I wouldn't be negative on this as long as it's above 486. So that's the story on a United Healthcare on a monthly basis. Again, stay above 486, 490, right? And here's your 485. Stay above 486, 490. Get above 504, 510, and then you'll be on the way. Okay. Otherwise, more severe correction could happen. All right, that's your United Healthcare. Let's swing over to FMCC. FMCC is Freddie Mac, not Big Mac, but Freddie Mac. So this is a penny deal, and I don't know what I can do for you here, but here you go. Okay, well, I got a buy signal down here when it's under 50 cents, and now it's going to run into purple, so it could have trouble right here at $1.87. Getting above $1.87 would be very, very good for this. If it doesn't, this could be the end of the story. Next one here. Got above gold. That's a good deal. So 140, got to keep it above 140, gets back above, back under 140. That's not a good thing. So there's another number to keep an eye on, 140. And again, everything's pointing up, so that's not a bad thing. Not a bad thing. But again, they're way down here. Reversion to the mean is going to be possible, particularly if it breaks 140. Let's talk about one. And by the way, if I was interested in buying it, I'd prefer to buy it against the mean as opposed to up here in La La Land. Okay, so here obviously it looks very extended here. Again, where did I tell you to get the buy signal? Somewhere around 50 cents, right? So this is where you should have been loading up. And then basically it's been holding all the lines, particularly you held the blue here. So if you want to add more, that's the spot you add more. And now this is harvest. I call that harvest because this is where you planted your seeds and this is where you are harvesting. I don't think this is a place to get started. Again, with that 187 not that far away, I'd be concerned about that. And I'd certainly be concerned how far away you are from the moving averages. So could it keep going? Of course it could. It gets above 187, the odds are going to be that it could keep going. But the bottom line is for an entry level up here, it's a little dicey for my taste. The 1 month, again, let's look at RSI here, was 65. Up here it is 69, no divergence, so that's not a problem. So, you know, like I say, they're all diverging. They're all inverted to the upside. Nothing wrong with that. Just the longer term graphs indicate that there could be a little bit of a reversion to the mean. Again, you start blowing out 175 and you start blowing out 187. And if we go back to the 20-year graph, you know, that's a lot of open area up there. So I don't know exactly what's going on here because I'm just talking technically. But 187 is your ceiling possibility. And then, of course, your pullback could be rather substantial if it's going to revert to the mean because the mean is all down in here. And So that's a pretty substantial drop reverting to the mean. Okay. All right, but it looks like you caught a good one as long as you caught it in the early stages. That's and you had a lot of opportunities here. The whole month of February gave you a great opportunity above the blue line right here. So this was not a one-day only sale. You had all kinds of time. But like I say, I view this as harvest, not planting seed time. Okay, what do we got after those two? We got a few more coming out of the woodwork. What are we looking at here? FNMA. Okay, we'll try that one. And we got UNH, which you already covered, so I can't go over it twice. I guess I could, but and we got Verizon. Oh, we got Mara. Oh, I like Mara. I just made a lot of money on puts with those. That was a couple of weeks back though. I haven't watched it lately. Probably went back up. Okay, so let's talk about Verizon. Oh, excuse me, FNMA. FNMA. Oh, Fannie Mae. So probably the same guy who's doing Freddie Mac, Fannie and Freddie, right? All right, let's take, same game, different time, huh? It's made a great gain. Boy, you caught a good one if you got in there earlier. Where'd you get the buy signal here? Well, you got the buy signal rolling up right off of this number here, which is like what? These moving average about 50 cents again, right around 50 cents. It said, give it a shot. Now you see it's running into the purple though, and that's why that's a problem. The purple comes in at 194.56 and we closed at 195. That's pretty much right on the number. So let's see how it does here now. Looks like it wants to blow through. And if it does, that's a great sign. So getting above 195 and staying above 195 is an excellent thing. The extremely long-term average is way up there. And I'm sure you're hoping that would possibly happen, but that's a long way from here. Turning to the 5-year. Again, you get your buy signal down here in the 40 cents, 50 cent area. You cross purple, you could buy more. You cross gold, you could buy some more. But right up here, again, looks a lot like a harvest, right? And you wouldn't know there's resistance at 195 if we didn't look at the long-term graphs. Another example how I operate, right? Okay, turning over to the 1 year. The 1 year is just telling us it's extended and it could pull back towards the mean. And where is your RSI here? 77. And this boy here is 78. So we don't really have a divergence here. So it's just nothing to help you here. Here you're at 79. So it is interesting. You've gone all the way up here and the RSI hasn't gotten any better than 79. And here, what was the RSI? 92. So you've gone to here and here without taking out that RSI of 92, which, some people might say is exhaustive. I'm sure there might have been some short covering going on here and stuff like that. Or maybe this is one of those meme stocks everyone's talking about. At any rate, my best comment, in my opinion, is it's harvest time right now, and 195 is a big key. If it can't get through it, pull back towards the mean, which is these averages, and that would be a more interesting place to enter in my view. Okay, let's go to the next one, which is Verizon. All right, we started the 20-year. Got to get the big picture. The big picture here is Tankola, right? Imagine if you were up here trying to buy calls and you weren't aware this was the all-time high. You'd feel silly, right? Or how about on the first dip when you can see now it's turning down at 56 and everything's turning down and you should have nothing to do with this stock at this point from the long side. Had you not looked at this, how would you know? Guessing? Some guy you heard on TV or radio or on the internet? That's probably a weak way of doing it. Anyway, so it came down and you got a little buy signal down here at around 36 bucks. RSI was obviously going your way, 28, and then it turned into 30, so that's a divergence. And then you had 43. That's a huge divergence. That's why you're having a rally. Can you see it's having some trouble with the yellow though? So that means what? That means 43.39, which coincidentally was about the high in the month of January. That would have been the time in January that you would have expected a back off. And right now it's still backing off. And the green's still pointing down and the blue's pointing down. So this is hunting for a diamond in a junkyard kind of thing. Maybe you'll find it, maybe you won't. 5-year graph. Again, running into purple. That's the reason why it stopped. And now it's coming back up. It's trying to hold red. So there's a judgment day coming here. You can start getting above 42. It opens the door to 50. You can't, it's going to give a reversion down. Now, these things are pointing up, which is not a bad thing. So the tide has turned and the RSI is up. So this is not something, I'd be trying to pound into the ground down here, but it would be something that if I didn't own it personally, I would prefer buying it at 42 and change on its way to 50 than buying it here and finding out it's going to revert down to 36. Let's take a look at the momentum here. RSI right now on that is 15. Yeah, you're in crunch time right here. Because if you can get through that purple line and you can get that RSI going through 60, you're probably going to run pretty fast. So I'd keep an eye on this baby if it can do that. And that's the big if it can do that. Get through 42 to 44 and you're going to run and you're going to run hard. If you can't, again, it's going to fall back into the soup. Okay, this one's again on this time frame, the 1 year, it is trying to turn up. So right now you got a very good place you want it to stay above, and that is about 40 bucks. So stay above 40, because if you start trading into the 30s, that's going to put this line into play. And then it's going to put this line into play. And if these two things crack, these are important moving averages to me. When they crack, that means you're possibly seeing a big trend change. So if you're a long-term holder on this stuff, I would, you can stay bullish as long as you're above 38 and 36, 36 what, 50? 36.50. Yeah. So if you can stay above 38, 36.50 on a long-term basis, you still have a good reason to think something might happen. Because again, on the 5 year, things have turned up. And they don't turn up very quickly, as you can see. This is months and months and months and months and months, and then it turned. On the 1 month basis, on a short-term basis, it was looking bad, got above purple, so it looks good. Now it's just a little extended up here. And the RSI here hit 64, and up here it is 62. So not much of a divergence, but it's certainly not going to the roof. And this could be an up flag with a down pole coming. So, you take your thing and you go bottom, 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 and that's kind of like a flaggy looking thing. And sometimes that comes with a down pole. So keep an eye on that. The longer we don't take out 41, 42, and 43, the odds of the down pole showing up increases, in my opinion. Okay, so there you go with Verizon. Mara. Now, like I say, I got a good sell position on that a few weeks back. You'll see why. But before that, we're going to show you I don't think it goes back very far. It only goes back to 2013. So we're not going to use a 20-year graph, although you could. And what it's telling you is it's having a hell of a lot of trouble at purple. And purple comes in at 26 bucks. So this thing started trading above 26. It'll open the door for all this nonsense up here, all that white area. So I wouldn't run away from this thing. I would keep an eye on it, but I wouldn't be happy owning it until it got above 26 again and started closing there, because that would open the door. Kind of like it opened the door, well, we don't, let's go to the 5 year graph. We might have better. And by the way, can you see the RSI is trying to hold 50? So it's a tug of war right here. Tug of war. 5 year graph. Yeah, you see, you got a lot of action here under right at the purple and gold's coming in at what, 15, no, 14 bucks, 14.50. That's really your big line in the sand. If you're longer term bullish, it gets under there, that's going to be trouble. Okay, but it isn't. And red is above green and green's above blue. So it's okay. I would love to see this thing hold green, which it has done in the past. And green comes in right now at 1822. So if I was in the thing, I wouldn't want it underneath 1822. Okay, and definitely not under 1589. So there's two numbers to hold your hat on. And then if it ever gets under the 14 number, I think it might be stick a fork in it time. So there's some numbers for you to work with. And again, the red number comes in at 2142. So what do we have there as the other number? 2142, getting above that is important, and 26. So 2142, 22 would be telling you might be on your way. Above 26, you are on your way. Here you go. You see it held purple, so you still want it holding purple. So on a shorter term basis, you want that thing holding up at 1723. The red line's kind of pointing down here, not a good sign. Green's pointing down, not a good sign. And the blue's up. So again, what did I say? Get above 21, 22 is important. Get above this number here, which is 23. So 22, 23, and 26. Those are your magic numbers in my view, if you think this thing's going to go back on the bicycle. Getting underneath or staying underneath 20 would be a negative, and then blowing out the purple line at 18 or 17.23 would definitely be a negative. Although, like I said, 14, 16, 14, that's the neighborhood on the other graph, I believe, where you'd want it to hold too, right? Let's see. Yeah, you see the neighborhood down here is pretty much the same neighborhood. You want it to stay above 14, 14.50. On this one, you want it to stay above 14, 16. So, this is your neighborhood if you're a long-term holder that you want it to hold. And if it does hold, this would be a place to add more. Again, these are all my opinions. Okay, it's trying to hold on to 20. I told you 20 is kind of important because if it doesn't, on the 1 month, it'll turn down. Getting above 22, you notice the gold line there. Remember 23, 24, 25, 26. This is the purple. So you need strength in this baby. Now, why did I see it as a put position? I'll show you why. Well, you can see up here. You see the red line turns down at 28. So you get into the put side. And even though it gets violated here, as long as the red line's pointing down, we're staying with that baby. And then it goes all the way down here to the gold, and that's where you dump. Why? Because gold can be a support zone or it can be a trend change. And here, obviously, it was a bit of a trend change. And that trend is still down until it gets back above gold at 22. So that was a pretty good trade, though, from here to here. Nice, short-term option, weeklies. Not bad. All right, so there you go. You got the marathon deal. Let's see what else we got up here. Do you buy leaps at all? And how far out would you usually for calls, a month or so, or do you like weekly or standards better? Well, I don't like anything other than what I think is the right thing to do. So being knowledgeable about all types of options and all maturities and strike prices, I have my own methodologies of which I use to pick out my positions. Generally, I only will work with a little bit in the money or a little bit out of the money because I don't want to pay total premium, which is at the money. And so a little bit in, a little bit out is basically my general preference. I don't really like spreads too much because, again, if I have to spread, it's telling me the premiums are very high, which means I'm late to the party. And if the premiums aren't very high and I'm spreading them, I'm probably taking in a very little amount of money and I'm going to lose a lot if I'm wrong. So I would say those are two ways I feel about spreads. And I'll tell you what I like about spreads is legging into them after I buy an option. Because that way, if I leg into a spread, I can buy an option for $3. And if I get a jump, I can sell an out of the money option for $3. And now I got no risk and a free look at a spread. That's my idea of a spread. But, have I done spreads before? And do I know how they work? Of course I do. But the point is if you ask me I prefer to use spreads as a defensive tool as opposed to an offensive tool, which means I'm going to use it to make sure I'm reducing my risk and still staying in the game to make a lot of money, but with no cash on the table at risk. That's what I like it for. So that's that. With regards to buying leaps, I'll buy long-term options sometimes, especially if the premiums are cheap. I mean, come on. I bought long-term options on copper with Freeport-McMoRan back in the day when it was down at $10. I said to my $8, $10, $5, $10, I said, we're not going to run out of copper here, and we're not going to not use it anymore. So I'm going to go out a long period of time, and I bought some $10 calls, I think, for a buck or something, and the darn stock ultimately went up to $50. But yeah, then I'd like to use long-term options when I can see that something might be at a turning point. I don't want to get frustrated with it nor tie up capital because I don't know how quickly it'll turn. But I think it will turn, and then I'll look at the long-term options and I'll take a shot at them. Some of these guys that tout how smart they are at options, they like to buy long-term options in lieu of buying stock, and then they sell the calls against them on the short run. Obviously, I know how everything works, so I'm very familiar with that too. But that's a reasonable way of doing it because you get a stock. I'll give you, for instance, like Well, like some of these super duper stocks, that go for $1,000, super micro and Nvidia and stuff like that. A lot of guys can't come up with, 100 grand, to buy 100 shares or whatever. So if you buy an option for a couple, 3 grand, you're in the game. You're in the game, and then if it goes nuts, you can participate. So it's a speculative substitute for buying the stock, and I don't think it's a bad deal in some respects. Long-term options, again, I see, or that's what leaps are, long-term options. I think they're best used for like great companies that have just had big corrections. When would be a great time to do it? I'll give you like on Meta. You know, Meta, we know they have 2.5 billion people. So they're going to monetize that thing at some point. Am I right or wrong? Right. So if you see it go down here towards the purple line at 150, and you go out a year and say, I'm going to buy the $200 call for $5 or whatever it's going for, then you're in Meta. And, if it does make the turn, right, then you're in there at $200, and $200 going to $500 looks like $300. And if all you paid is 5 or 10 or $15, that's called why you do long-term options, right? So, right now, if you thought Tesla was something that was worthwhile, and you think that the Electric Lady Orchestra is going to sing again, if you look at this chart here, you can see it's right there on the gold line almost. So if you think that this is a bologna sandwich underneath the gold line, and it's going to get back above 186, and it's going to go up to 300 at some point within a year, you could go on a long-term option and take a shot at it here with limited risk, rather than going in there for every 100 shares right now. You'd have to be putting up 17, almost 20 grand. And if you go to an option a year out, let's see what it would go for. Give you an example. We got to go to all options. And then we got to go to a year out. So that would be, what would be a year out? Well, let's go to the end of the year. Let's not go nutty here. How about December? Christmas time. Say by Christmas time, everyone's going to want their electric vehicles. And so we think 186 is going to be a breakout if it happens. And so these options are very expensive, as you can see. So not that exciting to me. The $200 calls for $4,500. I mean, that's a pretty big premium. So this would be one, if you wanted to play the game at all, you'd want to spread it. And so the fact you have to spread it tells you that it's a weird game. The premiums are too big. When I'm buying options, I want to buy them at a smaller premium and have the expansion of the premium be dramatic. Here, they're already priced for the darn thing to go right back up again. But the way you can negate that is do a spread. So I'll give you an example. If you thought it might go back to where it came by the end of the year, say 250, and you bought a 200 call at $45, these are all ballpark figures, and sold a 250 call for $30, then you'd be putting up $15. And if it goes to 250 or better on expiration day next year, where all the time premium is out of the option and they're both trading at only intrinsic, the spread would be worth $50. So $15 to $50 if you thought that by December 19th, it would trade at 250 or better. So in that case, you're putting up $1,500 rather than $17,000. And you'd still make a pretty good hit on it. And of course, you would lose the premium of $1,500 if in fact the market stayed under 200 between now and throughout the whole time. The options would expire both at zero if it's underneath there. All right. So anyway, that gives you a little example here. And now I got to figure out how to go back. Now I can go back. Thank you. Okay. Now, prefer spreads or not, standards. Oh, yeah. Like I say, as far as whether I go 1 month, 6 months or whatever, it's all based on my analysis and what do I think is going on. Things that I think are going to go on a longer run, like oil stocks back in February, I would give it more time, like a month or maybe even more, especially if the options aren't costing much. So the energy shares that I got very bullish on back in February, I gave more time to. Apple going down, generally I'll try to work with weeklies on that. because the premiums are very small comparatively for a weak option. And if my timing is accurate, those options can really go up, which I can show you an example of. Because that was one of them. I'll show you some of the trades that have worked out and why. Okay, let's get over here. Okay, put up Apple. Now, Apple is a classic, and I'll show you Exxon. Those are two stocks. Well, Exxon's right back up in the face, but here on the 20-year graph on Apple, right? So yeah, I know it's at the all-time high at 200, right? And I can see there's a RSI of around what? Well, over here the RSI was like 70, and then it's over here, and then it's starting to come down. It's at 58, and over here it's 60. What's it at over here? 65, and now it's at 58. So I can see a divergence. So I'm thinking this thing might be coming down. So I go over to the 1-year graph and I take a look, and I can see up here that it also, the red line starts turning down. So this is where I'm starting to hit it, right? And basically when it gets down towards purple, I think it's at an area where it could support. So, buying your puts up around 195 and getting a nice run down to 182, on a short-term option, which this was a very good shot. Then when it goes back up and you start monitoring it again, you can see the blue line never turns up, green never turns up. So this is a baloney rally to fill that gap, and it's not going to last. So basically, once it gets back under at 190, you start hitting the puts again, and obviously that's where this slide came in, and that's a really good run. And you can add more puts as it breaks purple, as it breaks gold. So that's an anatomy of a good trade right there. And right now, if you're an Apple player, you're holding on for dear life here. You want the purple to hold up, which is 165. And then if it goes underneath that and starts breaking, it could go into the abyss. I don't think that's going to happen, but it could. And then again, on the 20-year graph, the blue line comes in at 160. So if I was interested in Apple, 160, 165 is where I'll throw my bait into the lake and see if there's any fish out there. Okay, so that gives you a little idea on Apple. Let me show you the Exxon one, because it's kind of the same idea. And this is the anatomy of a good trade. Okay, so again, I go to the 20-year graph, and now I know what? Just like Apple, this darn thing's at its all-time high up here, isn't it? Right? Right. And I see some divergences on the RSI, tells me what? It's exhausted. So now I go to the short-term graph, I go to the 1 year, and I can see it starts turning down at about 118. So you start getting your puts going, goes through green, I know I'm onto something, goes through blue, I'm really onto something, goes through gold, it's time to get out. And that's what you do. Then it comes back up and hits the blue line, which is pointing down, which green is pointing down, and the red's pointing down. So I know this is a baloney rally. So you can hit it again. And obviously make a very nice thing on the way down. Now it bottoms out down here because your RSI is down here at 30, and then down here it's up at 40. So I know it's running out of steam on the downside. Once this thing turns up, I can start playing it on the upside. Now it's a bit extended, so that's a problem. There was a gap there, just got filled, so that's been done. So Chevron looked, I know I'm diverting here, but I'm just giving you a little bit of information. I hope you're not unhappy that I'm doing this. Chevron's one is interesting to me. If it goes to 157, I think it's a time to see. You see this on the 1 year? It's a hit in the gold. If this thing can break through gold, this thing has more potential than Exxon right now because it hasn't moved yet. And this is a darn good company. Now, you see the big gap there? It's screaming, come and get me, right? Hopefully. And so if it can start closing above the gold, which comes in at 156, so we're right in the neighborhood, I think it's worth a shot because this is all pointing up, which is not bad, right? And it's above purple. And then if it gets above gold and these things are pointing up and the RSI is right around 56, maybe you'll get the acceleration phase, which is why you want to be in the market. All right, so that's my little 2 bits on that. Let me show you what else I can show you. Do you run it? Do spreads or not? Okay, Microsoft, Leap, stock or leaps? Well, let's take a look and see what it looks like. I certainly wasn't too happy about those Tesla calls in case you haven't figured that out. But if I have a gun to my head and I had to trade them, I'd spread it. All right. So, in fact, Tesla, if you have the money to buy the stock, probably put selling wouldn't be the worst thing in the world if this thing is going to go back into an uptrend, because if you get put stock, you have the money to buy it, and you say you want the company. So if the stock's at 170 something and you're selling the 150 put and getting well paid, you're going to get the stock at 150 minus the premium. Okay. If it goes through the roof, you're going to keep the premium. So anyway, that's how I figure out things, and I can do it very quickly. With regards to Microsoft, I got the feeling Microsoft might be a little peaky here. Let's see how smart I am. All right. Well, it's certainly at the all-time high, so calling it peaky is not exactly a ridiculous thing to say. And it's very far away from its moving averages, so it's a candidate for a reversion to the mean. And so that's what it looks like. On the RSI up here, it is 75. RSI over here was 81. So this was the former high at 81, big new high, and we're still underneath the old RSI. Let's look at the 5-year. Okay, you got highs up here of RSI around 80. And now you got the RSI at 67. Looks like it's running out of steam to me. Now, but again, it is definitely got nothing telling you the trend's turned over. So let's see if we can find anything that says the trend might have turned over. Okay, nope, this is still underneath. So right now that 420 number is kind of a big number. Let's see if it holds in 410. You break 410 and 420, it opens up 380. On a 1-month basis, now you got something to work with here, in that the red line is at least turning down and you're under blue. So if next week we can get red to cross over green and then cross over blue, then this thing will probably go down to that 430 number. I mean, that lower number we talked about, or 400 anyway, 412, 400. And so, yeah, I mean, and like I say, if you're in the stock here, well, I mean, this thing could be going to 5,500. It could be going to 6,000 on the S&P. This guy Powell on Friday is going to be talking about the PCE. If the PCE comes in cold, he's going to say, I told you so. We're going to cut in May rather than June. That's going to set the thing on fire again. Conversely, if it comes in hot, like the other CPIs are coming in, so I don't know why it would come in low unless it's made up in Fantasy Island. But if it comes in hot, and the guy, I mean, everyone's interpreting this guy Powell as we're definitely high cutting for sure, probably 3 times for sure, and we don't care if inflation runs hot. We're going to tolerate it through the election. That's what everybody is saying. So this guy on Friday said, hey, wait a minute. We're not tolerating any high inflation, and we're not definitely cutting 3 times. So if he starts talking sober talk, then obviously the market is not positioned for that, and that's how you get a correction. Okay. So anyway, that's why Friday is very important. With regards to this stock then, up here, well, if you owned it, wouldn't it be if you want to protect your equity, if you just want to ride it up and down, which people do all the time, wouldn't you want to consider a replacement trade where you would take your gain in the stock and then replace it with call options, limited risk? So if it keeps going, you have a position, but if it doesn't, all you lose is the premiums. It would be something to at least consider. So let's say you wanted to do the options instead of buying the stock. Well, right now, if you had bought the stock at 421 times 100 shares, every time you ponied up, you'd have to pony up 42 grand. Not everybody's in the 42 grand for 100 shares lifestyle. So let's talk about if you bought an option. Now, if you're going to buy an option on this thing, I mean, you could buy short-term options, but you might want to be protected on the call side going through the election, or at least, because again, the seasonality for this thing is November to April, right? And then doesn't it get a little bit weird between May and October? So, I mean, I don't know. If you wanted to go until the election, which would be November. Let's just say if you wanted to go year in, what would you have to put up? Hold on. Yeah, we'll go to that December 19 deal again. December 20. Christmas time. All right. and it's at 421. And so, I mean, obviously, why would you be in it? You'd be in it because 5,500 on the S&P is going to happen, or 6,000, and this baby's obviously going to be involved. So where's it going to go? Well, if it had another 20% in it, you could have a move up to what? 420 times, let's call it 15%. You'd be going up towards 480, 500. So let's see what you could do to make any money going up to that area. The market's at 420. Buy a little bit out of the money. So you buy the 430s for about $40. And then you sell the 480s for $20. And you put up $2,000. And you put up $2,000 to make $4,000 if it goes up to $5,000. If it goes up to 480 or better and closes up there, so that all the time premium and all the volatility premiums out of the option, and they're only trading at intrinsic value, which only happens one of two times. Either you're way in the money, or it's near expiration. But anyway, that would be the way to do it if you wanted to do options and try to make some money with it. But again, when these premiums get like this, this is and you have to spread them, that's a rough racket. But it's the only game in town unless you want to pony up $4,000. And if you pony up $4,000 at 430, your break even is going to be 475. And 475 eats up a lot of the possibility here. So not a lot of great alternatives when you're buying things after they've happened. And that's why, again, getting back to Microsoft, where would I have been looking at buying this thing? If I was a trader on it, I'll show you where. If we go to the 20-year graph, look, it's all turning up at 260. And on the dip back down towards 300, those were your two chances to buy at a reasonable price. Maybe 360 here when it got a little bit close to the red line. Let's see where you got your buy signals here. Buy signal down here at 240, pulled back here, beautiful, 325. Pulled back to the red, you could have picked up some at 368. Pulled back to the red, you could have picked up some at 400 here. But again, if I'm looking to get into things, I want to get into them when they revert to the mean. I don't want to, when things get up into the ozone, I want to be thinking about grabbing my money, not adding. But I mean, that doesn't mean you can't win. I'm sure people just keep buying NVIDIA for the last 2 months on every day you buy it. Obviously you'd be happy. That's not the way they all work out, though. Okay, so that's that. And let's see if I could see any more. Okay. So we have hit a pass here where I guess if you have any more you want me to look at, you can put the stock in there, and we can talk about it. But right now, I'm going to be talking about a few things that I think are kind of interesting as we speak. A couple of things that might be at turning points, if we are going to get a turning point, because again, we have not had any. But some of the things that could be at turning points, we'll take a look here. QQQ. If this guy talks badly on Friday, we're going to get a turning point, I think. So on the 1 month graph, again, it is trying to turn over, but you need red to get under green, to get under blue, to make it a more substantial drop. So it has started to turn because the red line has rolled over, but it's early to say. Something to monitor, though. Something to monitor. And clearly, if you got back above 447, that tells you you're back on the bicycle. Another one is the semiconductor index. Okay, on the semiconductor index, again, same story. It's starting to roll over a little bit, but it's way too early to call for that. So we'll have to see. Another one that I thought is starting to look a little rolly over was, let me check here. So some of the ones that have gone through the roof. Meta. Obviously, we're going to get a correction of any size. These things have to roll over at some point. So Meta obviously it looks like it is rolling over, but it hasn't crossed over, so it could pop right back up again. But this one definitely looks like it's giving up the altitude. Like I say, this is what I've been thinking is going on. So I've kind of been negative on it since 510 and 505. So again, it could pop right back up, but the seeds of a turn, like there was over here, where you got a pretty good drop from 525 to 475, the seeds are starting to be put in, because you can see it broke underneath both of the averages. Okay, another one that looked like it could be in a rollover deal, because I've seen some other ones that have rolled over. I mean, take a look at these. I mean, don't it's not crazy to think of a rollover. This is IBM. That's a pretty good rollover. Qualcomm. Short-term puts, when they go down 20 bucks a share, they're not bad to own. Qualcomm. This is on the 1 month graph. You see, it had a nice big rollover down here. Then it rallied. Now it's rolling over again. What about what's his face? AMD. AMD. Okay, AMD. Yeah. So again, that's called a rollover, right? So, when I'm looking for rollovers, it's not because they don't happen. I just showed you some great examples of it happening really recently, right? Okay. So those are rollover candidates. Let me see. You got another chat thing here. Let's see what you got. When to buy AMD? Okay. Oh, KO. All right. All right. When to buy AMD? Well, I'll tell you what my opinion would be. How about if it goes back to 120 where the moving average is? All right, let's get a better spot. Oh, you had a spot right here. So right in this neighborhood, it could be a spot, right? And that spot is right around the 175, 179 area, right? You see 179 right there? So if it starts getting back above 180, this could be a neighborhood where it could be a buy. Because underneath there, you're going to 150. How about on the 1 year? Okay, the 1 year, yeah. This is a thing where you need strength because it's underneath the blue and the red's pointing straight down. So this is a place where it could gap down to 150. Or this could just be bologna sandwich. Remember I told you about bologna sandwiches? It's called bologna sandwiches, where somebody's trying to get somebody's stock out of there before they take it off. So I said if it gets above 180 would be a good shot. And here on the blue is 184. So you start seeing a trade 180, 184, you might be getting right back on the bicycle. And there you go. You see if it gets above purple line there, that would be very positive on the monthly, and that comes in around 186. So those are your numbers. 180, 184, 186. Those are good numbers. And that opens the door to get back on the bicycle, maybe even fill this gap over here, which comes in at 205. So you want to know what I think? That's what I think. All right. Bullish means buy. No, bullish means it's going up. Buy means you're at a point where it's time to maybe do something. Yeah. In other words, buy is a specific thing, and you should be doing it at a specific area that you think is a high probability zone. Bullish means you just think overall it's going up. Okay, KO, Coca-Cola, a staple. That's what we call these. It's a staple. Or maybe consumer discretionary. Maybe everybody doesn't need to buy a Coke. Anyway, we look at a 20-year graph. What's it telling you? Telling you this could have value. And by the way, that's one of the things I was going to mention is staples and companies like this, what they call dividend payers, because a rotation out of the Ferrari crowd into more the Range Rover solid car deal might be happening here. You know how they took money out of Apple as a source of funds and put it into the other stocks? Well, at some point they may take it out of tech as a source of funds and put it into the other stuff. Same idea. Okay. So yeah, do I like this thing? Well, as long as it stays above this blue and this, and what's that? 59, 60 bucks. So stay above 59, 60 bucks. I like you. And if you can get above 65 bucks, you're on your way. On this thing here. Yeah, this is a traffic jam that's got to be resolved. So again, 58 to 60 bucks, that's your neighborhood. And getting above 62 gets you going. Look, they're all coincidental, right? They're all in the same neighborhood. 58, $60. That's your zone you got to stay above. Above 61, 62, 65, you're on your way. So I think, you got something to talk about here. That is something that may going to be happening. These other things that people talk about have already happened, and they just hope that they never stop happening. And never stop happening is a little spotty. It's not my cup of tea. Okay, so that's for those things there. And now I'm going to, give you just quickly, because we don't have a whole lot of time left, give you a quick rundown on some things that may have potential. So let's take a look at some of these things. China. China is the second largest economy in the world, and they're not going out of business. So is this thing turning up? It looks like it might be. So, and is there a lot of real estate above? Looks like there could be. So on the 5-year basis, what does it look like? Again, a lot of resistance, though, a lot of resistance. But again, if there's a second half of the year recovery here, and this looks like what, 23 versus what, 34, that means it ran out of steam down here. So keep an eye on it. This thing has a lot of real estate above if it starts moving. So does this thing here. And this is their internet deal. Again, another one that looks like it's trying to get moving. Getting above the gold here at 27.50 would be a fabulous thing. So keep an eye on it. And then, of course, you got Alibaba, which is the Google, I guess, of their country. And, this thing as well is, rough time right now. But, something to keep an eye on because, again, this is I'll show you in the last 20 years. I mean, you're down in the lowest area for 20 years. Okay, so if it does start to move, it'll be something of interest. Baidu is another one. Let's see if that looks any better. They're starting to get partnerships with people that look interesting. Okay, on the 20-year, it doesn't look that great. On the 5-year, same thing, stalled out. But what about on the 1-year? Starting to turn up a little bit. And again, you're sniffing around at lower prices. Look this stuff is, I know we already know they got bad news over there, but this stuff used to be a lot better. So these are some of the ones I'm watching just to keep an eye on. Now let's talk about ones that look like they're definitely have turned the corner and maybe they've got a future here. This is the XLE, which is your oil shares. It looks like it's trying to take off. And it has taken off, but on a longer term basis, it looks like it might be taking off. And if crude oil can get above 85, you'll notice right here. Not Colgate Palmolive. That'll be like Coca-Cola. Good stock now, though. CLK, crude oil. Because I was very bullish on crude oil 65 to 70. You'll see why. See 65 to 70 against a purple line, right? And now this baby here, if it gets above 85 or whatever this number is here, whatever it is, 83, 84, 85, it could open the door to have a very big run here during the summer. So keep an eye on this, and that would probably be good for some of these stocks that I mentioned, like Chevron. So keep an eye on that. There could be a lot of potential there. I'm trying to look for things where the puck is going, not where it's already been. Another one here is these metals, gold's at a very important area, this 2170, 2160, 2180. If it gets through 2180, it's going to probably get going pretty good. If it can't and breaks under 2160, 2140, then you're probably, you're done on it for a while. This stuff here, the gold mining shares, if we can break above 30, 31 and get going, a lot of area up here. So keep an eye on this. This is something that hasn't happened that could happen. And industrial metals are another one. That's your copper, your steel, your aluminum, stuff they're going to be building like a new bridge down there in Baltimore. God help those people. But this stuff to me looked like it wants to fly. And, it has been as high as 95 back in 08. And then it has been as high as 65 if it blows that out. There's only so much of these metals out there, and there's a lot of rebuilding to be done. So I would think that this is something to keep an eye on. All right, it's 5 minutes before we end, so I'm going to give you a spiel on why I'd like you to call me or contact me. Okay. Let's see what I got here real quick. Did you explain you used? Yeah, I when I talk to you after the broadcast, I'll be more than happy to explain what I'm using. I gave you the CLK there, and that's it. Okay, so here's the deal. I've been doing this a very long time, and I manage my own money in a variety of different ways. I consider myself a fairly knowledgeable person, and I'm a very balanced person because I always talk about the use and the risk of everything we look at. And I believe my methodology of how to figure out where things are going is sound because I use it for my own trading. And I'm very familiar with all the different strategies on the options. So what I do is I have a link that I send out with these indicators, and I give you a 1 hour session like we're talking now, and I explain how to interpret these things or my interpretation of them. And basically, I show you a bunch of different things that I have done where it has worked out very well. And that's basically an anatomy of what a good trade looks like. Then we go over stuff that you're interested in and see what it looks like in my process. And sometimes people have said, thank God, I wish I would have heard you earlier because I had a big winner and it turned into a loser. I had a big loser and I should have never got in it, but I didn't know. Or I've hired these 3 services and they stink. Had I had a way of verifying what they were talking about, it would have been a lot better. And I got this newsletter who obviously has made money in the last 90 days because, obviously the whole board's gone up. But before then, I lost a lot of money with them. Listen, when I'm done with you, you'll have at least some mechanism of figuring out what you hear and what you read, if it has any confirming with regards to my approach. So that's very, very helpful. And again, I don't charge people for the month and for the week or for a hot trade or for the year. And I'm not hitting your credit card every 2 minutes. I have a one-time charge. And in my view, it's about the price of going out to dinner nowadays. So that's pretty cheap. And basically, I stay on the phone with you until you have a pretty clear understanding and until you feel like you've had most of all your questions answered. So I find this to be very rewarding, helping people like this, because I know there's a lot of people out there who are not as informed as myself, maybe have a different set of values than myself. And so I think there's some good stuff that I bring to the table. If you're just starting out, I've been teaching options for decades, so I know how to explain them to people who are just starting out. And then, of course, since I have expertise, the likelihood I may know more than most people is pretty high because it's been my thing for decades. And again, I've been to the Options Institute in Chicago, so I've been trained for advanced option training many times. So how do we get together? It's pretty simple. You go to optionprofessor.com, OPTION professor, PROFESSOR.com. And you put your information in there. I call you back and I go, hi, Mr. Jones, this is Jim. I'd like to get the link over to you. I'd like to set up a time where we can talk. We could do it right away, or you could set up another time. And then we get going. And we can talk about hedging and replacing risk and all kinds of stuff that I'm familiar with. So all you need to do is bring me your situations and I could at least give you my view and my opinion on what I see. So that's how you get a hold of me. Yeah, or you could just shoot a quick email, optionprofessor@gmail.com, and say, here's my name, here's my contact information, ring me up and let's get going, or at least call me back and further explain what you can do for me and see if it's appropriate for your circumstance.